Good morning. It's Tuesday, September 17th, about 6 a.m. Central Time. Overnight, the precious metals are pulling back after Monday's flat trading session. Yesterday, gold futures traded in a $15 range before settling down 70 cents, while silver futures traded in a 51-cent range and ended the trading session near unchanged. It appears that gold and silver are finding some degree of complacency in the markets ahead of the FOMC meeting. They're anchoring themselves around whole psychological numbers such as $2,600 and $31 an ounce. Looking at the overnight price action, you do have December gold down $9.30, trading at $2,600. December silver down 13 cents, trading at $31. December copper up 185 at 429. That's been surprising and has been rising here despite the weakness in China and despite the global weakness in the economy. October platinum futures down $5 at 982. So no other markets are really making any meaningful moves overnight other than U.S. equities, where in the after hours, Microsoft announced a $60 billion share buyback and increased their dividend about 10%. The bull-bear line for me on the December E-mini S&P futures, and if you haven't rolled over, you're going to want to roll over from September to December, is going to be 56.65. So market trading right at about 57.15. This is about the overnight resistance and about as far as we're looking on the upside move here. High overnight 57.21 and a quarter in some thinner trading. I believe that the market, we could see kind of a pullback down at 56.65 where the market would be supported. Any kind of breakthrough that level could open the door for a larger washout. If you're interested in day trading the S&P 500, I do put out signals here every single day, and many of you day trade with me quite extensively. So looking at the headline and economic news to follow today, investors are still awaiting the retail sales data as the debate of the size of the Fed's interest rate cut continues. Looking at the retail sales data, the expectations on the core retail sales, positive 0.2%. Previous month was 0.4%, another positive number. Retail sales month over month down 0.2%, and the previous was 1%. So we'll see what happens with this number. Any kind of firmer number could play some kind of small role and cause a little bit of volatility in those markets. Now, getting to the Fed funds futures and the CME's Fed watch tool, this is what everybody is now watching, and everybody, for months I've been telling you to bookmark this thing, and it seems like now everyone's paying attention to it. So you go 1 week ago, investors saw a relatively strong economy with falling inflations and reasons for the Fed to only cut 25 basis points. Now you fast forward just 1 week later, and it's a 65% chance that the Fed will cut 50 basis points, 35% chance that the Fed will only cut 25 basis points. This is very different from where that picture was, and I believe that this half point cut that everyone is expecting suggests that the Fed is more worried about a deteriorating economy, and this is where those recession fears grows and things like that. Being such a data dependent guy like myself that looks at all these different data points every single day, I haven't really seen that type of breakdown to cause this meaningful alarm on the economy. That's why I've been more in favor of the camp and many other banks out there, banks like Apollo and Goldman Sachs, Morgan Stanley, Bank of America, all thinking that only 25 basis points would be appropriate. Now, the big question is, what would a 25 basis point cut do for the precious metals? Because I know that's what you guys care about. Now, if you look at the chart pattern on the gold market, what happened? Let's just be real straightforward. You go back to last week, we were pretty quiet in the market. Things were kind of humming along and we were bumping along just right around that 25.50. We saw this takeoff in the market. In that takeoff here that was on the September 12th and 13th, this was the Thursday, Friday. There was a small deterioration in the labor market, and that's where the 50 basis point camp really took over in the market. And since Thursday, gold futures have adjusted to a 50 basis point cut, as fueled by new all-time highs, about a $75, $80 rally in the market here. So I believe that if we do only get 25 basis points, you should see some type of correction in the gold and silver market. Now, the correction, I believe, will be shallow because of the fact that gold futures are nowhere close to pricing in the full duration of the interest rate cuts that we expect to see. Our expectations are for Fed fund futures to get down to 3.25% by next November of 2025, pushing gold prices up to our about 12 to 15 month price target of $3,000 an ounce. We believe a realistic year-end price target of $2,750 is quite achievable. Remember, these non-yielding assets like gold, they become more attractive when interest rates decline. So the faster the acceleration, the faster gold prices can move to those levels. The slower the acceleration, or the questioning of how much the Fed is going to cut, is going to delay that type of movement higher. Now, I do believe that something else that's kind of lingering in the background that hasn't come to fruition yet is that ETF investors are absent from the gold market right now, and that futures have considerably more room to run once those investors come into the market. So looking at today, I believe that this first correction, we are at the first support level, which is the psychological 2600. But I believe that the complacency we've seen in this market really since about August 5th shows that the average true range has declined to about $32 a day. So your next critical level of support below this 2600 is probably going to be right around that 2580 level, and would be looking at more of a aggressive toe in the water type of level to stick your to start to add and build positions. I think silver futures have really come up, but with copper futures rising again, and there was one day last week where I said that gold futures were hanging at 25.50. I talked to multiple clients in the morning. Copper futures had taken off to the upside. Dollar index was lower. 2-year yields were lower. That set the stage for silver futures to rally, and silver futures ended that day up $1.20. So looking at some of these things and checking the boxes is one of the ways that I trade in these markets. Now, your first level of support really on that silver market today, you're going to want to see it come down to about $30.80. So only about 20 cents lower is the room to run. But I think that 30.52, I think, is going to be your major critical level of support if this sell-off can get any kind of momentum to the downside. So you got any questions, give me a call. I'd love to talk to you. Love to get your guys' emails here. My phone number, 312-858-7303. Remember, futures option trading involves risk of loss. May not be suitable to all investors. Good luck, good trading.